SK Hynix just raised a whopping $2.5 billion in its US debt offering, marking the largest deal of its kind for a South Korean company, and its stock is surging as a result. This massive influx of capital is a major coup for the memory chip giant, and it's likely to have significant implications for the global tech industry. The fact that SK Hynix was able to secure such a large offering is a testament to its strong financials and the continued demand for its products, despite the current market volatility. This move is also likely to put pressure on SK Hynix's competitors, such as Samsung and Micron, to secure their own funding and stay competitive in the rapidly evolving tech landscape. The success of SK Hynix's offering is also a reflection of the ongoing appetite for yield among investors, who are seeking out stable and secure investments in a time of economic uncertainty. As we move forward, it will be interesting to see how SK Hynix uses this new capital to drive growth and innovation in its business. Moving on, it's been a wild ride for Meta investors this week, as the company's stock has roared back to life with its best weekly performance in years. Meta's stock surge is largely due to its new low-cost AI pricing and infrastructure plans, which have sparked renewed optimism among investors about the company's future prospects. The move is seen as a bold bid to challenge the dominance of rival tech giants, and to establish Meta as a major player in the rapidly growing AI market. With its new pricing and infrastructure plans, Meta is hoping to attract more developers and businesses to its platform, and to drive growth and revenue in the months and years to come. The big question now is whether Meta can sustain this momentum, and whether its new AI strategy will pay off in the long run. As we consider the implications of Meta's move, it's also worth thinking about where to put our cash right now, with CD rates at a standstill and the next Fed rate decision looming on the horizon. The question on many investors' minds is whether to lock in at current rates, which are around 4%, or to wait and see if the Fed will raise rates again, potentially leading to even higher yields. It's a tricky decision, and one that depends on a range of factors, including your individual financial goals and risk tolerance. One thing is certain, however, the Fed's next move will have a significant impact on the direction of interest rates, and on the overall health of the economy. In other news, Volkswagen's CEO Oliver Blume is facing an uphill battle to push through a major overhaul of the company, after labor unions torpedoed his turnaround plan. The move is a significant setback for Blume, who has been trying to drive change and reform at the embattled automaker. With the unions opposing his plan, Blume will need to go back to the drawing board and come up with a new strategy that can win their support. The stakes are high, as Volkswagen struggles to compete with rival automakers and to navigate the challenges of the rapidly evolving global car market. Meanwhile, in a move that's flown under the radar, India and New Zealand are planning to elevate their relationship to a strategic partnership, including cooperation on maritime security. The move is a significant development in the Asia-Pacific region, and reflects the growing importance of trade and security ties between the two nations. As we look to the future, it will be interesting to see how this new partnership plays out, and what implications it may have for the broader region. And finally, be sure to tune in next time to find out why Amazon's latest move into the healthcare market could be a game changer for investors and consumers alike.